Hey yo trader, what's up? How are y'all doing today? Okay, so today in this video, actually, I'm going to share again another scenario on what if. So, what if, let's say, the de-dollarization effort actually gains significant momentum? So, let's check it out. Okay, so what do I mean by that is that what if, let's say, the major global economies, right, actually increasingly move away from using US dollar? I think this is not something new. You have seen some of these global trade partners actually come out to form the trading blocks, right, to actually trade among themselves and not using the US dollar. So yeah, if let's say this tariff thingy actually is going to accelerate all this, right? What will happen to the US dollar and yeah, in terms of the international trade and things like that? Okay, so of course, the potential driver or the trigger in this case, right, is that if let's say the US side is going to make use of this US dollar and making use of it as a weapon, like let's say for sanction and yeah, in terms of the trade conflicts and all that. Yeah, so probably this could be one of the potential trigger or the driver to push people away from the US using US dollar. And also if let's say there's a growing interest, right, in alternative currency. I mean, it can be renminbi in China, and then or euro, or let's say digital currency like cryptocurrency. Okay, so these are just hypothetical currency that can be used. But of course, there could be, like I mentioned, the formation of trade block. Maybe there will be even more of these trade blocks that will be formed in this case that will actually drive this scenario of people moving away from using US dollars. So what will be the immediate effect? Of course, immediate effect is that reduce or drastic reduction of this US dollar demand. So US dollar demand will be low, and then of course in terms of the forex volatility, right, and because I mean through history for the past, like let's say 50 to 100 years, US dollar has been the dominant or the world reserve, right, and yeah, world reserve currency. So in terms of a lot of currency is either they are pegged with US dollar or there are businesses that trade with US and also basically trade in USD. So USD is a very widely used currency in the world, as we all know. So definitely the volatility in the forex market will be really impacted. Okay, so these are the immediate effect. And then of course in terms of the impact on the businesses, right, as you can see over here, portfolio reevaluation, because as mentioned just now, a lot of people, not say people, I mean countries or businesses deal with the US, and of course they need to deal in US dollar and stuff like that. So yeah, there will be portfolio reevaluation in terms of investment, in terms of the businesses, and then of course businesses will have higher forex risk because of the volatility that is in the forex market. And then yeah, so especially if let's say this company, right, actually has a lot of these global what you call it, global counterparts or businesses that they are running, especially those big company in the US. So they will definitely have a lot of volatility in terms of the FX risk. And then of course in terms of bank, they need to, let's say, manage larger volume of other currency, because right now if let's say for example US dollar is no longer the let's say in international money, right, or currency, then of course there will be a lot of other currency, let's say renminbi, euro, that the bank is actually going to manage. And then of course in terms of that there will be more maybe more chaos that will be happening. Okay, so what will actually happen to Singapore, right? So in terms of the impact to Singapore, of course we as consumer, we need to be more aware of the alternative payment and currency that will be right there and then in the market itself. Yeah, be it using euro, or let's say digital currency, or let's say renminbi. Then that's just for hypothetical assumption. Okay, then secondly, of course, we need to look at the potential fluctuation on the import cost as well, because Singapore is also a very import orientated country, because most of our goods like the food that we eat and all that all come from various part of the world. Okay, then that's one thing. And then of course, lastly, you need to also take a look at the changes in the value of your investment and saving, if let's say they are in USD. Mainly I think more on the investment side, because for local wise, a lot of people actually is invested in the US market, right? So if the US dollar actually fluctuate and there's a lot of uncertainty, maybe it's time for you to take a look at rebalancing your portfolio or diversifying your portfolio, right? So that's one of the impact for the Singapore consumer. Then, of course, not lastly, but last but not least, geopolitical impact, right? So there would definitely be fragmentation. Maybe people, or rather countries, might stick to Russia. Maybe those that are more closer to Russia will form a bloc there, and then those that are in Southeast Asia will actually form a bloc with the China, Korea, Japan, and all that. So yeah, maybe a lot of people, I mean, a lot of countries will actually have all this fragmentation, and then of course on the South America side, maybe they will form their own block to trade with themselves. Okay, so this fragmentation is not good because, yeah, I do believe that globalization is something that should be maintained so that everyone actually benefit from each other's pros and cons. Not maybe more on the pros. Yeah, like let's say I have these goods, I want to sell it to you. You have something that I don't have that you can sell it back to me. So there's a mutual beneficial cycle there, right? Better than your protectionism, protecting your own economy or countries and things like that. So yeah, of course, the geopolitical impact would be also a global power shift, be it to, let's say, China, India, or Russia. Okay, then of course there will be alternative financial center. Maybe the financial center would no longer, or rather maybe it won't be so much focused on the US side already. So these are just all hypothetical scenario. But I think previously, a few years back, I've actually already read on this, the death of the dollar. Somebody actually wrote about this, and some of these ideas is actually part of it, from there as well. Okay, so what should we actually do in terms of, let's say we are a normal consumer, retailer and all that? So we should actually be mindful in terms of the SG context, be mindful of the Singapore dollar and other foreign currency rate. What are the changes? As I mentioned, the volatility in the forex market will be large. And then secondly, also in terms of the saving and investment, like I mentioned, diversification would be important. Okay, so don't put all eggs in your let's say the US market and things like that. I wouldn't say that the US will go down, but maybe it will be less dominant in terms of the, yeah, if such thing happen. Okay, won't be that dominant as compared to previously. Then lastly, wise, right, familiarize yourself with the alternative payment, okay, methods, or even currency. Okay, so yeah, that's all for the hypothetical thing that could happen if, let's say, we have a global economy that is going to increasingly move away from the US dollar. Okay, so if you have learned something, give me a thumbs up. Thank you.